Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Naveen Fluorine. Well, these are the top headlines that we're tracking at this hour. Markets trade absolutely flat going into the final minutes of trade. HDFC Bank, ITC, Reliance are negating the gains coming in from TCS, HDFC and Infosys. The Nifty IT index is the top sectoral gainer. Gains are led by large cap IT majors. A coal ministry official tells BloombergQuint that the government has decided to not allot the Gare Palma coal mine to JSPL, keeping public interest in mind, and the stock trades with losses. Students protest police action against Jamia Millia Islamia University students. The Vice Chancellor seeks judicial probe. Good afternoon, Neeraj. I think it's profit booking right at the top, and 12,100 is something where resistance is coming.
Yeah, but I mean, a bit of a nothing kind of a day, because after the initial pop that we saw in the morning, we've gone down and then had a flatline trade of sorts. I mean, don't be deceived by these small gyrations. It's a very narrow band in which we have traded, so almost a flatline trade, both for the Nifty as well as for the Nifty Bank, which was up 0.5% when we started off trade, and similar trend you will see die there. It started off well, but since then in a very, very narrow band and trading about flattish in the session. So hardly any movement for the key indices. I doubt that the mid cap and the small cap indices too would be doing something dramatic, but we'll talk about that in a bit. If we can get the heat map up on the screen and show what's happening on the Nifty 50, the quantum of red just slightly more than the quantum of green. Remember, it was even Stevens within the first couple of minutes of trade. Grasim down about a couple of percentage points. Sun Pharma was the top loser. It's moved out of that list and currently just about 0.89% right at the fag end of your screen. ITC and HUL, both of them have corrected today, as has Nestle. So FMCG has taken a bit of a back seat. Adani Port is down, Reliance is down, Maruti is down. So autos too down. HDFC Bank and Maruti also give you that flavor. What is doing well? A bit of return to safety. So all IT names, TCS, HCL Tech, etc. are doing well. Infosys too up about 1%, and Kotak Bank continues to rise and shine. Another 1% uptick for this one. Really strong show, as also ICICI Bank. Naveen, I mean, save for HDFC Bank, you can say banks also haven't done all that poorly.
Well, they've not done all that much either. They're just about flatline, like you said. So you would have anticipated a slightly larger move considering the settlement of SR Steel, as well as the SBI Chairman stating that Ruchi Soya settlement's going to, it's going to get today, clear today. So that's the other one that needs to be watched out for. But like you said, it's an absolutely flat day across the board. You've got mid caps and small caps also looking just about flat. Mid caps slightly in the red, small caps slightly in the green. Mid caps here, and what's doing well, PNB Housing Finance is up about 3.7 odd%. You've got Indiabulls Ventures, HEG, Edelweiss Financial Services. Remember, Edelweiss asset reconstruction arm also gets a lot of the money back with regards to SR Steel. So that one is doing good on the back of that. Godrej Industries and the Gas are all up in trade today. What's not doing well is the Sterlite Technologies, 5% under yet again for a Sterlite Tech. You've got Mahindra & Mahindra Finserv, which is down 3%. Avaraja Batteries, Cholamandalam Investment. These are all names which are looking weak. And Prestige Estates in Friday's session was up about 4 odd%, gives back a bit in today's session. In the small cap index, while the index itself is up marginally about 1/3%, this is what's doing well and what's not. So Trident is up about 9 odd%, JM Financial 4.5% higher. Delta Corp has been doing well off late, so that one's up about almost 3%, and Avanti Feed along with Deepak Nitrite, Life for Deepak Nitrite, and the stocks are up 2.5%. What's not doing well is Suzlon. Dish TV continues to reel under some amount of pressure. KEI Industries and Timken India down about 2% apiece, and Trade Access Grameen too loses out in today's session. That's down about 1.5%. But let's also get a sense of what's been happening in the derivative space. Navneet joins in for that. Navneet.
Thanks for that, Davina. Well, we're off the opening levels, but still holding on to that flattish territory right now, at least. So for Nifty futures, we've not seen any major build-up coming about. Remember, even after the rally that we saw on Friday, there were no fresh positions being built up on Nifty futures. As you can see on your screen, open interest is flat, but remember, the premium has come off significantly from those levels of 55 to 30 points, giving you a sense that markets are in for consolidation. We could be in for also a range-bound trade, at least in the coming days. For Bank Nifty, which witnessed short covering on Friday, is definitely seeing some fresh build-up today. So 12% higher on the open interest side for Bank Nifty futures, and volatility is slightly on the higher side, though the current levels should not worry the bulls at all. 13.7 a rate is where 13.4, so that's absolutely fine for the bulls. bulls. It's still at 3-month low. In terms of options picture, then, what are the levels you should watch out and what sort of activity we are witnessing today? 12,100 call on your screen. Fresh writing definitely visible there. 12 lakh shares have been added. And on the put side, maximum addition has also come in for the same 12,100 strike, giving you a picture the bulls and the bears will be fighting aggressively for this mark, though we reclaimed the 12,100 mark in the morning session, but from thereabouts there was some profit booking seen. The range for the this Thursday expiry remains between 11,900 to 12,200. Individual stock futures, tech stocks are doing well, so Tech Mahindra being one of the gainers. On the future side, we've seen fresh long build up. The stock last week had taken support at 50 and 200-day moving average. From thereabouts it's gained, and it's also gained on high volumes on the cash side. As you can see on your screen, the white line projecting today's volume vis-a-vis the average volume of last 20 days. So good data points coming in for Tech Mahindra. Kotak is the other one which has hit its life high levels, and this has been an outperformer in the recent past. Today's future activity indicating more of long positions even at higher levels, and after the stock has crossed the mark of 1700, the call writers of that strike have run for cover. The next level that the traders will be watching out in Kotak Mahindra in terms of options data is 1800. RBL Bank has snapped the 3-day gaining streak. There is weakness seen in this bank, and short positions have been visible on the future side. Open interest up about nearly 5 to 6%.
All right, let's begin with the Global Voice. And Hans Goetti, who is an independent research consultant, is joining us right now on the show. Hans, thanks very much for taking out the time. So at least some stability on the global front with regards to even Brexit, with regards to the trade talks. I mean, obviously, you know, the issues with the trade talks are not escalating, but they're still on simmer. It's not like it's gone away completely, but the market is okay with that. What's your sense on what global equities do from here?
Well, we have to distinguish between equity prices and fundamentals, because there's clearly a disconnect here. I mean, what is driving equity prices at this point is liquidity. I mean, the Fed has injected 300 billion into the repo market since the beginning of September, essentially buying treasuries, and it's the same effect as QE. So you could say that the Fed is back into QE mode after having lowered interest rates 3 times. And that spills over into global risk assets, and therefore I think that the path of least resistance in the equity markets, not only the US but globally, is up, so is higher. At the same time, we have a slowing global economy, manufacturing and capex in recession, and a lot of debt in the world, which makes it difficult to stimulate the economy. So what we have here is a disconnect between risk assets and the fundamentals.
What is the expectation with regards to, how the entire fundamentals and also interest in putting money into some of these Asian markets or emerging markets would look like? I mean, when we looking at China, we've got a growth rate pegged for the next decade at anywhere between 4.5% to 5%. You've got India, which has recently got a low print in terms of its GDP numbers itself. But where exactly is the money flowing to?
Well, emerging markets is one. Emerging markets clearly benefit from easier monetary policies around the world, and also potentially from a weaker dollar. The dollar hasn't weakened decisively yet. It has had a very strong spell over the past few years. But to us, it seems the dollar could roll over, simply because the Fed may be forced to cut interest rates again next year and then catching up with the whole world. So a weaker dollar would be good for the emerging market space. And you mentioned China and India. India, yes, it's slowing down. China as well, but you have pockets of strength. For instance, in China, the technology sector offers tremendous opportunities, because China will have to make sure that they do not depend on supply lines that from, or the supply chain. They will develop their own technologies, and I think there's a tremendous opportunity there in the next few years for investors.
Hence, you highlighted the rally that we've seen for global equities has been liquidity driven, and that's absolutely true, because back home in India as well, we've seen the flows picture at least looking better on year-to-date basis. Do you then expect this liquidity driven rally to continue even in 2020, or do you foresee any change in asset allocation? Can the preferences change from equities to something else?
You see, what we have to bear in mind, of course, is that equities are no longer cheap by any standard. But for now, as long as the central banks keep pumping liquidity into the system, we think that equity prices could go higher. Another asset class which we like based on fundamentals will be treasury bonds. I know this is a bit controversial, but we don't see inflation as being a threat. We actually see probably a slowdown in the economy in 2020 rather than a reacceleration as so many people expect. So I believe that the long-term treasury bond yield, which is currently at about 1.84, could go a lot lower. And that, I think, opens a great opportunity for patient investors in the long-term treasury market.
Okay, and what's the overall view for India? You said, of course, the flows could be seen in emerging markets going ahead as well, but there are some divergent moves with regard to growth rate. The GDP is at 6.5-year low, but the equities are at all-time high. How do you approach the Indian markets?
Well, in India we have a slowing economy, but at the same time you have fiscal stimulus. I mean, we had the tax cut for corporations, and we'll see what the budget will bring. I think there are calls for tax cuts for individuals as well. I think where we see the limits, and that's not only in India, that's everywhere, the limits of monetary policy to stimulate the real economy. I mean, if you have loose monetary policy, yes, it drives asset prices, but can it really stimulate the real economy? And I think that's where probably fiscal policy has to come in despite high deficits. So we'll see how that's going to play out. I think in India you also have inflation above the target, but I think that's mainly because of rising food prices, like is the case in China. So I think there's a combination probably still looser monetary policy, but a lot more fiscal stimulus coming.
The budget's going to be an important watch in the month of February for India. Possibility of some personal tax cuts, which once again helps spur consumption, which has been sputtering so far. But my question, on the other hand, is also with regards to something that was recently announced, which could indicate more passive funds, almost to the tune of $2.5 billion that could come in from FPIs into the country because of tweaks in the FPI investment limit at a corporate level. Do you feel that that could be a possibility and that could help raise investment sentiment?
I think it could. I mean, first of all, India is FDIs are very long-term. It's long-term money, and India is a great secular growth story. There's no question about it. Despite some cyclical issues that exist, I think the money flows will be positive going into India over the coming years.
Okay. If the flows pick up, Hans, due to such action by MSCI or otherwise, do you reckon the overall valuations could creep up higher despite the long-term story possibility being there? People are questioning the valuations with which India is trading currently.
Yeah, I know. I mean, that's true. It's not a cheap market. As I mentioned, the U.S. market is not cheap either. There are other markets in the world which are cheaper. Europe is one. Japan is another one. But I think valuations, if the story is good, valuations maybe don't matter that much in the near term at least. So I'm not pessimistic on India in that sense. Yes, there could be a bit of volatility, but in the long run, we strongly believe in the secular growth story in India.
Okay, Hans, one final question from my end at least. When you look at the Asian landscape, a lot of people, including CLSA in the recent conference that they were here, mentioned the possibility of how the other North Asian countries look a lot more attractive, and therefore on a relative basis in the near term, India might not get the lion's share of the flows, it will be other markets. And we all know that right now it's liquidity which is driving the valuations higher for almost all markets. Do you think on a relative basis other markets might be better off?
Well, possibly. I mean, it depends a bit on how the trade story plays out. I mean, you have Korea, you have Taiwan. These are economies which are really tied into global trade. And if you see some less tension in that department, I would think that these should be the beneficiaries. And I think valuations are a lot more reasonable there than in other parts of the world. One market we like in particular here, which may not be part of the Asian universe, but it's still part of Asia, is Japan, because Japan has a lot more attractive valuations than the US, and in Japan we have seen 2 or 3 lost decades, and so Japan therefore is a lot further advanced than everybody else, and Japan is no longer alone, and a lot of bad news in Japan is in the price. So I think that with an emergence of new equity culture, rising dividend yields and so on, we think Japan is a great story in Asia.
Hans, we leave it at that. Thank you very much for joining us this afternoon.
My pleasure.
All right, moving on. JSPL has lost out on securing the Gare Palma coal block yet again. A coal ministry official has told BloombergQuint that the government has decided not to allocate the coal mines to the steel maker. This despite JSPL emerging as the highest bidder. Nikki Mirchandani joins us with more details on why exactly JSPL has lost out on this mine. Nikki.
Okay, there's a final level of clarification which came in through Coal Ministry today, and this pretty much puts an end to the curiosity that all of us had with regards to Gare Palma. What Coal Ministry essentially said that they're not going to be allocating this mine Gare Palma 4x1 block to JSPL, keeping in mind public interest, and the current price, the final price that JSPL offered was rather too low given the kind of assessment of the current market situation, and also they said that the price couldn't be lower than the price that they saw back in 2015. It also said that even at this point of time, at the highest premium, given that the bid price, the final bid price was 50% higher than the base price, does not reflect the current indicative value of the block. Just to put things into a little perspective out here, out of the 6 mines, 5 have been allocated, while one, Gare Palma, despite having a 50% premium, has been held back by the government. Government has also gone ahead and given 5 of these mines at a premium of less than 2 to 8%. So for that matter, a premium of 56% or 58% for that matter doesn't augur well for the coal ministry right now. The whole issue actually surfaced on December 5th when the notification given the name of the successful bidders, and JSPL name did not feature into that list. Come December 13, again it was reiteration of sorts, and just said that except for Gare Palma, all the mines have been allocated, putting in question mark on Gare Palma allocation at this point of time. But then Coal Ministry now gone ahead and said that it's not happening. In itself, this is kind of history repeating in itself, because back in 2015, Balco also had emerged as a successful bidder for this mine. The mine was not allocated by the government. Also, if you look at JSPL's history in terms of winning these coal blocks, Gare Palma, other blocks have been denied despite the company emerging as a successful bidder, with the same reason. The government said that the bidding price doesn't indicate the fair value, despite it being as the successful or the highest bidder at this point of time. What it essentially does to JSPL, well, this block had a capacity of 6 MTPA, which would have ensured coal security of more than 10 to 12 years for the company. It would have ensured a saving of around 800 to 1,000 odd rupees per ton on this, and would have bought in an incremental EBITDA of around 480 per share. Many of the brokerages at that point of time also suggested that winning of this bid would actually lead to an increment share price of 30 rupees from the price. At this point of time, we've already seen the stock has tanked a good 10 to 12% from the last time the development came into the fore.
All right, Nikki, thanks very much for that. So that's JSPL. It's already come off those highs and now trading with cuts of closer to 2% in today's session, almost 1% rather, 137 on it. Foreign portfolio investors remain net buyers in the Indian equity markets for the 3rd straight month in November. So which sector mopped up most of the flows and who missed out? Yash Upadhyay is here with the fine print of the research done and compiled by our colleague Anirudh Saligrama. Yash, over to you.
That's right, Navni, Devina. So let's try and look at the FPI inflows, and we are seeing for a 3rd consecutive month the inflows in positive territory, and it almost hit or reached the mark of $3.5 billion in the month of November, which is at least the highest since March of this year. And this is also we are seeing a rising trend with only the last 2 months of July and August being negative over the last 12-month period. So consistent inflows from foreign portfolio investors in the Indian markets is what we are seeing, and a bulk of these inflows they have come into the financial space. So a majority, or almost 65% of the inflows of nearly $3.5 billion that has come into the financial names, and we've seen how the financial stocks have played out. There were the last 2 months which were extremely positive for the bank Nifty. We saw 8 consecutive weeks of uptake, and on the back of that, as you could see, the foreign inflow driving the financial stocks higher, which is at almost $2.2 billion in the month of November, which is more than twice of the second best sector. So the others, which basically includes all the other sectors which do not fall in the likes of insurance, retail, they saw inflows of close to around 780 million dollars. But again, it's the banking stocks which have done extremely well. $2.2 billion, like I mentioned, of inflows coming in the month of November, and this is how the trend has been for the banking sector overall. So we are seeing a third consecutive month of inflows, and at $2.2 billion, it is the most in terms of monthly inflows that the sector has seen, at least in the last 12 months, for which the data is available on the NSDL website. So strong inflows and consistent inflows, with only 2 or 3 of the last 12 months seeing an outflow number from the banking space, which is an indication of their liking the financial space. But on the other hand, we have seen outflows coming in yet again for the information and technology space. So IT has seen an outflow of close to around $286 million, and this is also for the 8th successive month that we are seeing outflows from the IT space. Food and beverages, pharma and biotech, these are the other notable names, as well as textile and auto components, which have remained under pressure due to several reasons, and that's why we are seeing that outflow number coming in for these sectors. And IT, like I mentioned, saw outflows coming in for an 8th consecutive month, this time at around $286 million, which was again the trend as is suggested. Well, not as much as what we've seen in the previous 4 to 5 months, but nevertheless it still continues to remain in the negative territory, indicating that most of these foreign portfolio investors are staying away from IT and are buying more of the financial stocks. Back to you.
Yeah, but those charts are very interesting and quite stunning that while banks have seen what they've seen, IT has actually lost out quite a bit. Yash, thanks so much for putting that into perspective. And Anirudh, our colleague who worked on the data as well. Okay, so if IT is not done well, although the space is doing well today, but flows haven't been that great, I think one pocket on which the flows have been consistent is chemicals and specialty chemicals. And within that, Naveen Fluorine is that one stock that is trading at fresh highs in today's trading session. Now, thought of taking a look, it's come off a little bit from the highs of the day, I thought of taking a look at some of the factors which might be aiding the movement in this stock, and which is what I want to go across and try and talk about. So first, the trading pattern in today's session, and there's a graphic dashboard function on the Bloomberg terminal, which of course shows how the volumes today, it's up about 0.5% currently. Last few days, the trading pattern here, the ups and the downs, but it's up today on fairly high volumes. And remember, the 20-day average volume also has inched up because the trading pattern in the last few days has really gone up. Now, my producer has prepared a chart which shows the volumes uptick in Naveen Fluorine in the last few days. This is the 2-week chart, and as you can see, in the week before December 9th, which is the Monday, the first few days of the month of December, the volumes were very tepid. They were not very high. So as you can see, these bars are very tiny bars, and then suddenly the last few days, the volumes have picked up. There have been odd days of a downtick, but otherwise largely the volumes have been very, very high for Naveen Fluorine. Now, everybody tries to think, why is it that the stock might be doing what it is doing? There are some reasons that I thought could be ascribed. So first, they've announced that as per what they had mentioned in the conference call, that they're going to invest about 450 crores as capex to drive growth. Now, this is the first time in a really long time that Naveen Fluorine has announced a capex, despite the balance sheet giving them the ability to do that for a really long time, which means that the management may firmly be believing that there's a growth phase that is there up ahead of them. Now, keep in mind, one, the specialty chemicals order book and the order inflow has steadily improved. And when people, I was looking at the MK note, for example, when analysts look at their capacities in RFG as well as specialty chemicals, they believe that the specialty chemicals capacity utilization and asset turnover may be 1.5 or 1.75 times the capacity, and at peak utilization, the overall capex might add up to another 700 to 750 crores in terms of revenues. Now, let's try and juxtapose this against what the estimates are. 700 and 750 crores, remember, at peak utilization. This is what MK, for example, believes that Naveen Fluorine could do for FY21. They believe the revenues could be to the tune of 1249 crores and the net profit to the tune of 236 crores. Now, understand this, that the capex alone might add about 700 crores to revenue and top line. And with the presumption that Naveen Fluorine believes that it's the right time to do the capex, it might add substantially to a base which is of about 1250 crores for FY21. Needless to say, the last few days the stock has done well too because it's trading at life highs. But as a result of that, if we can get the ANR function on the terminal and get it up on the wall out here, as a result of that, the return potential for Naveen Fluorine has now turned negative simply because the stock price gain has been so steep. If we can just expand this chart out here, it will show you what I'm trying to say. This yellow line is the current market price. This white line is the target price. And as you can see, because of the rally that we've seen in the Naveen Fluorine price, today, the stock, the yellow line, which is the current price, has overtaken the white line, which is the target price. And now there is a bit of a negative return potential out here on Naveen Fluorine simply because the stock has rallied so much. But if indeed other brokerages raise the target prices, then you never know. The average return potential or the average target price might improve from the current price of about 942 or thereabouts, which is the average return price for Naveen Fluorine. So a lot of specialty chemical companies have done well. Naveen Fluorine is not behind.
Right, so that's one stock to keep an eye out on in today's session, as well as over the last few days and what the stock's done. 943, just about 0.5% in an extremely flat market. Moving on, ArcelorMittal's 42,000 crores payment for the acquisition of SR Steel has entered an escrow account, according to SBI Chairman Rajneesh Kumar. Speaking to us earlier in the day, Kumar said that he also expects more resolutions to happen within the next 45 days. Listen in.
The money has come in escrow account with the State Bank of India, and distribution will start happening today itself.
All right. So how much is State Bank of India going to get from the money that has come in?
Approximately 12,000 crore.
12,000 crore. Okay. Just want to get in a sense from you, the money that now comes into the account, obviously is going to show up in Q3 numbers. But yes, for you as a bank right now, any bigger stressed accounts that you feel that this money is going to be utilized for in terms of propping up provisions?
No, we have one account in NBFC sector, so we will use a part of the money for propping up the provisions in that account, even if it may not be required by regulation. Still, we will upfront the provision.
So one question from my side is, now that we've got the SR Steel resolution done with, you've got the money in the escrow account, you'll start the distribution today itself. You had earlier on in Q2 highlighted to two other accounts that could get resolved pretty quickly as well. Could you probably give us an indication as to how soon or how much more time could this take? Because now we've got the precedent of SR Steel, so the others should not take too much time, right?
It should not, with the recent amendments in IBC, where there was an issue around attachment of corporate debtors asset by ED. And I think if not by 31st December, but in January, we can expect recovery in the other two accounts.
Mr. Kumar, congratulations.
But it will not be as big as this one.
Yeah, of course. But still, heartiest congratulations, because we finally see one of the principal cases coming through. Just a couple of questions, Mr. Kumar. Does this and the other resolutions make you a bit more comfortable about the current scenario? Because we were talking to some analysts about how the situation on the ground right now is, and the SME sector is still reeling from liquidity issues and recovery issues. Are you seeing that within SBI's accounts as well, sir?
No, SME, one thing we have to realize is that historically, traditionally for the bank, the SME NPAs have always been on the higher side. And we are not seeing that position is undergoing any material change. But stress is there in MSME because their payments many a times gets delayed. And that is the principal reason for SMEs coming under stress. Yeah, definitely. I think I said this in one of my earlier con calls, or I don't remember exactly, but I said that in terms of recovery, this is going to be the best year. And accordingly, it will have a huge positive impact on the bank's earnings. No, quite a few of them. Power sector, we saw that that money has also come. Prayagraj Power was a big account in power sector. Then there are 2-3 more accounts in power sector which can get closed in next 1.5 months. Then today we are expecting closure of Ruchi Soya. And so that's what I'm saying, that there are quite a few accounts which in next 45 days will get resolved.
All right, that's the SBI chairman there talking about the SR Steel case as well as the fact that Ruchi Soya will get resolved today as well. Not as big as SR Steel, but I think closer to 800 odd crores is the exposure there. So 332 for SBI, but must say the move is pretty much done with the head of this itself. It started off on a positive note, but then came off from there and now lying absolutely flat, 332.7 for SBI. Let's bring in our market guests then. While the markets are doing nothing, let's see if we have any exciting trades lined up for you. Hemant Kapadia of Care Choksi is joining us on the show. Along with him, Ajit Mishra of Railway Broking is also there with us. And on the fundamental side, Sameer Kalra of Target Investing is with us. I'm going to start off with Ajit first. Ajit, a quick take on the index and the levels you're watching now.
Yeah, good afternoon, Devina. So, Devina, we are seeing a roller coaster ride for almost a month now. Again, we have reclaimed the level of about 12,000 mark in the Nifty, and again the Bank Nifty is trading at the record highs. So after that initial pullback that we have seen of late, we feel that market have reclaimed the strength, and possibility of testing higher levels again seems high. So considering that after that recent move, today we are seeing a pause in the index. So we may see a consolidation for a day or two around the current level. So closure around 12,060 is what we feel one should initiate fresh longs. With the stop of around 11,960, 970 on spot Nifty, and closure around 12,300 is the target. And similarly for the Bank Nifty also, our bias is positive and we are eyeing 32,500 levels. But for that, one should wait for a dip, closer to around 31,800 and with the stop of around 31,450.
That's the view coming in on Nifty. Bank Nifty buy on dips is something Ajit is recommending. Hemant, good afternoon. What do you do at these higher levels? Clear sign of profit booking coming for Nifty at least around 12,100. Do you buy these slight dips also that we're seeing in today's trade?
Very good afternoon, Noni. Thank you, Fang. Yes, I think profit booking, even the Bank Nifty saw significant OI shedding on Friday. Long unwinding. But the bias is surprisingly turned positive. I thought we were going to take at least a few weeks before we make an attempt at taking out 12,150. No need. But yeah, the Bank Nifty, I think what has 35-38% weightage on the Nifty, showing exceptional strength. We are at previous all-time highs, so a day or two of consolidation seems to be on the cards to absorb the selling. We're going to make another attempt post Wednesday to take out the all-time high. If that happens, I think Bank Nifty looks like moving up 1,000 points. Nifty looks like moving up 200 odd points. Navneet. So I would be bullish, but the early indicators have signaled a sell. So I believe small round of trepidation consolidation is around the corner. I would be more bullish on the Bank Nifty. We are at 31,997 spot. Closer to 31,800, I would buy the Bank Nifty futures. It is currently 32,042. So I'd buy the futures that with a 200 point stop loss and a 500 point target, Bank Nifty on a 100 point decline bar.
Okay, so the view largely remains same, buy on dips, and Hemant prefers Bank Nifty at lower levels. And remember, Bank Nifty in the opening trade today hit its all-time high levels, once again surpassing the previous highs that we'd seen on November 28th. But that's about the indices. Let's also ask our experts what stocks are they betting on this afternoon. Ajit, individual stocks that you're betting on today?
After the recent rally, we have seen a marginal pullback in ICICI Pru, and after spending nearly a week or two around the crucial support zone of 50 EMA on the daily charts, the stock looks all set for a rebound again. So the risk to reward is favorable. It looks bullish on charts, and the kind of candle formation that we have is also indicating a probability of strong surge in days to come. So with the stop of around 485, one can buy stock at current levels with 505, 510 as its target. And IGL also, we have hardly seen retracement from the record highs. It was just a consolidation for week time, and again it's set for a breakout. So IGL is also a buy candidate. At current levels, one should initiate fresh long. 412 should be a stop loss, and closer to around 435, that should be the target area.
Okay, two buy calls from Ajit's side, IGL and ICICI Prudential. Naveen, what about you?
I have one buy and one sell. A buy on Tech Mahindra Navneet. I think the bank Nifty is shown, the Nifty IT has shown a lot of traction. So I guess I'm just going along for the ride. So a buy on Tech Mahindra 455, stop loss. Sorry, a buy on Tech Mahindra at 775, stop loss 769. Target 787. We've given a mini breakout of sorts. The early high of 785 provided some resistance. I guess we are going past 800. And I have a sell on Sun TV, Navneet. We remain in a downtrend on the daily and weekly charts. So lower top, lower bottom continues. On a small bounce at 455, stop loss 460, target 445.
I doubt too many media stocks are making creating investor wealth these days. You've got to keep that at the back of your mind. However, well, what is surprising is the way banks have reacted to it, as we said. Somehow, most of us believed in the morning that banks would have a good day in trade, but the Nifty Bank has been largely quiet. Samir Kalra is with us. Samir, good evening. Thanks for joining in. Putting to rest any doubts, the SBI Chairman today at about 8:30, 8:40 on BloombergQuint mentioned that the resolution has happened for SR. The money is in the bank. The money is for even Bhushan Power might happen today itself.
Ruchi Soya.
And Ruchi Soya, excuse me. And the other two, even though not as large as SR, might happen in Q4 itself. Now, these are all positive news. And do you reckon the stocks haven't reacted because the markets have already digested that? Or is it that they're playing along with what the market mood is currently?
So I think somewhere it had digested what eventually happened today. As in the money came in and everyone knew this was coming up. And if you see from the bottom, a lot of PSU banks have rallied 10 to 15% based on this kind of a update which was due. Now comes to the second leg, what kind of money this gets used to. Now, if half of it gets used to by providing against the NBFCs which were pending, or does it go to the value growth from here on?
He said some of it will be used as provision.
So what proportion we are talking about, that again comes into the sense. Because right now, if you see NBFCs were taken at least a 40 to 45% exposure provided for, whether it was DHFL or others. So I think there is now the first phase of the optimism is out of the system. But now onwards, it will be more how within the December quarter they use it and what kind of results it really shows.
So the first time that this, when the actual resolution happened, the stock went up to 350 and then it came off to about 312, 313. So with the money actually coming in, the excitement seems to be a little more tempered rather from the first time around.
But again, if your GDP growth has come to 4.7, right? If you see auto numbers, they were up in October, November, but December again, first half, they've slowed down drastically. So again, if you're just a bump up and it wasn't a recovery, then you have a lot of provisioning ahead as well. So we are not over with provisioning, and I don't see it as a bottom for NPA cycle right now. So I think it's more in the mid cycle right now. And this money will help out boost the one-time profits and the divergence they were not reporting or under-reporting.
Okay.
But beyond that, I think it's too early to call for optimism.
Okay. A trade on SBI, Ajit, would there be one at 332?
So, Devina, as we've already seen a very strong surge from the bottom of late, so we may see some consolidation or dip. So, closer to around, let's say 330, one can definitely initiate fresh longs with 324 as a stop loss and 345 as a target.
The other one which is doing very well today is Ujjivan Small Finance Bank. It shot up yet again about 8%. So, after days and days of a pullback, I think in Friday's session it had a slightly positive day. And it's up about 8% again in the session today. There is also arguably one more small finance bank IPO coming out in early 2020 as well. But just wondering, Samir, fundamentally, Ujjivan Small Finance Bank or the holding company, is there merit in trying to own either of them?
So I think for me, small finance bank or micro lending really doesn't work out as an investment on the longer horizon. Because if you see there's always a bulky asset quality issues which come up every 3 quarters or 4 quarters. There are flood issues which they are not able to manage up. The collections vary if you see over a longer horizon, the collections vary a lot with a margin of 5 to 10%. So I think it's better to stay with private banks. Maybe IndusInd Bank comes out a little optimistic out here because of the Bharat financial support which is there in the system, and it's on a automated kind of a system. So I think IndusInd can give you that kind of exposure if you want. But I still feel, direct private banks or PSU banks is better than a microfinance lending.
But you've got, something like Credit Access Grameen. The stocks doubled this year. Looking at the numbers also, I think it's been decent in the recent past. They've kept a check on their asset quality. Why wouldn't you bet on this space? Because there are certain players which have given good results.
So see, again, over there, if you see Avas, if you see Credit Access, if you see Mass, so these 3 companies have been hitting all-time high. And again, since even a 50 or 20% down, their valuations were always a concern. And see, there's a difference when you start. Ujjivan and Equitas started way long before than these guys started. So there's always kind of a cycle to a microfinance lending. And I think within a year or 2, these guys will find it difficult to show this kind of a growth. So when you're doing this kind of a value investment, it's better to stay off the high value companies.
Okay, that's the view on the macro finance companies. What's doing well, of course, we've highlighted is the IT space. Nifty IT is your top sectoral gainer. Hemant has already given a call on Tech Mahindra, which has seen good volumes in the cash side. Even the futures are witnessing fresh long positions. But Sameer, coming to you in the IT pack, I think last month when the markets recovered towards the end, IT as a pack did not recover. Some strength coming back in the last 2 or 3 days maybe. Would you take a bet here at a time when currency is somewhere about 70.5 to 71?
So I think now IT for me becomes a stay away sector for next 12 months, because whenever, if you see the history, election is in US always dampens the BFSI spending. There has been a lot of bonuses cuts in US as well. The bonus pool has shrunk up. So that means your IT spending will also shrink up in 2020. So I don't see that getting a boost, and that's where the revenue of BFSI, at least for Infosys or TCS kind of large cap companies, really come off. So I think I'm not that optimistic for next 1 year, 12 to 18 months, but I'd rather play it out later on.
So the trigger will be US elections?
Yeah, it becomes, because see, if your spending really halts out or your contracts don't get executed as per timelines, these kind of revenue growths which you were showing in past couple of quarters, especially Infosys, I think that might peak out for at least 2 to 3 quarters.
Okay, just want to take a technical check on TCS. Remember, the stock was weak 1 or 2 days after Shapoorji Pallonji Group had sold in the open market. But today, even if you look at technically, the stock has touched its 50 DMA. Ajit, on the charts, looking at the simple moving averages as well, the recovery that we've seen for TCS, does it warrant to take any positions on the long side?
So, yes, Navneet, we have seen a very strong rebound on the level of close around 2000 mark, which was earlier the support level for the TCS, and the stock has also breached its immediate hurdle close around the moving average ribbon. So that indicates that this momentum could carry from the current levels, and with the stop of around 2100, which was earlier the resistance, one can initiate fresh longs, and close around, let's say, 2190, 2200, one can hold the longs.
Okay. What's not doing well today is LIC Housing Finance. That's come off at 429 for the counter. We've got a dip in Polycab, which is down 2%. That's at 960 and come off heavily from those highs of about 1045. Apollo Tyres is also looking weak. And Dr. Lal Path Labs, ever since the news of Reliance Life stepping into the diagnostic space, that one has taken a dropping of sorts. So it's at 1452 now after nudging 1650 odd, which is my next question actually. And I should pull up actually Metropolis, Thyrocare, and see how all of these other names are doing too. So Metropolis has been down about 0.5%. The last 7 days performance, just a quick glance at that, Thyrocare is up about 0.5% too in the session. the last 7 days, about 5% given up by Thyrocare, by Metropolis, another 5.5 odd percent. Samir, how do you view this for the industry now? We've seen what Jio did with the entry into telecom. Do we expect something of a similar nature for diagnostics? And then the kind of valuations and the prices at which Dr. Lal and the others trade at, does that give away?
So I think if you're a trader, it's a good place to book out, and then don't expect those kind of returns which have happened in the last 6 to 12 months for at least a medium term. From an investor point of view, I think it becomes a good place to start looking at these companies, because 6 months back, no one wanted to invest and the valuations just spurted up very badly. And I think this is more of an anticipation that Reliance will play the same strategy it played out in terms of Jio. But the industries are very different. The logistics involved are very different. The quality and the perception of the clients are very different. It doesn't mean if you're cheaper, you're better off.
Plus, you can't storm the market with free tests like you did with Jio.
So it becomes a very difficult task to break into the system.
I mean, things were said about retail as well. Now look at Reliance Retail and how that business is contributing to retail. I mean, they've managed to kind of make their way in practically every segment that they've entered into.
But if you see the retail end, they are not cheap. They have cheaper competitors as well who are not doing well. It's more talking about being efficient in that system. Now, if you're controlling the back end and the front end, I think they'll still not play that cheaper kind of a strategy that they want to break out the...
No, that was not the question in the first place. Not that they're going to come into the market and then
this can
give out.
definitely lead to price disruption. As a diagnostic space, you depend on volume growth for your top line and bottom line growth. That can get impacted with Reliance.
If you see the north, Dr. Lal is much more relevant in the north and on the west side. There have been regional spreads where either it has been a coincidence, or the branches have been very far away from each other. The competition is not that concentrated with each other. So I think it's more of physical presence where you have, and I think it becomes a cheaper valuation and a better strategy to start looking at as a SIP investment right now.
In any which ways, they've been the ones to actually start taking a market share from the unorganized players. So, I mean, they have their own name and space to be in.
And see, the only point is the valuations will only subside because there is some change in the industry or certain particular things are changing or a new competitor comes in. But if you see the history, if Metropolis or Dr. Lal has been a cash-rich companies, as an investor, I'm more concerned that they don't go net debt.
Yeah.
Competition in and out, margin squeezing out can be a temporary phase where I rather put more investment than getting out of it.
It's surprising, the valuation. Of course, Dr. Lal has gone up 60-70% this year. It's trading at 40-41, and these are the valuation you ascribe to a FMCG company.
But if you see now the number of life insurances people are selling off, that is bringing a lot of path lab traffic to them. Second, the hospital chains are more going towards the outside tie-ups. Earlier, they were going more local tie-ups. So now they also want a recognized path lab to be branded with them, rather than going for a local guy where the commissions were much better for them rather than anything else.
Okay, that's about the diagnostic space, but let's just mark few stocks which have seen gains. Pull up Mastec. I think it's gone up 11 to 12%. It was up 5 to 5.5% on Friday as well. I guess this is another company. I think 70% of their revenues come from a UK market, but they've also sold partial stake in Majesco. That was the news which came in on Friday. BGR Energy was locked in upper circuit with gains of 20% on Friday. They won some order from Tamil Nadu government, and today also the stock's up about 17 to 18%. Ashiana Housing, I think after many days, you're seeing some buying interest coming into this one. But on the losing side, of course, Grasim is down 2%. You've got Bandhan Bank, that's down 4 to 4.5%. Hemant, would you take a bet here? Bandhan Bank at 492?
It could go down for a day or two more, Naveen. We are at 490. We made a small distribution a couple of days back, and we've broken down at we've broken 5 and 0. So I believe we are heading towards 470. So no, I'd wait a bit, and if I were to take a contract call, I'll wait for it to come to 470 whereabouts and then take a contract call.
Okay. Just looking at some other stocks which have gained in the last few minutes of trade or last half an hour of trade, you do have IRB Infra, which I think we marked also, but up about 6% in trade. Watch out for that one. The one strong mover the last few days has to be Phoenix Mills. It's 785 currently, up another couple of percentage points in the last few minutes, and therefore trading nearly at the day's highs. And look at that spike. They're on fairly decent volumes too. It's a bit of a black box predicting what the earnings of specific real estate companies could be. Phoenix seems to be that a case apart kind of a company here, but expensive, isn't it?
Neeraj, been invested in past 3.5 years. It's been always expensive. As an investor, I've never found it, cheaper because see, again, they are based on heavy capex in a certain sense, because if they have to increase the capacity, the footfalls will increase only then. There's no way a high street Phoenix kind of a model can run where your footfall can averagely grow on a 10 to 15% kind of a basis. So seeing that the capex and the cash flows used in that kind of a capex and the returns which come in 3 to 5 years, it becomes expensive. But again, nobody is able to match that kind of a area of expertise, let's say, in that certain sense. So I think it's better to stick with more consistent performers, especially in real estate right now, because everyone is anticipating kind of a U-turn in the system for real estate. But as of now, I still don't see any kind of signs moving it up. So I think it's better to stick with Phoenix or maybe a Oberoi right now, where your cash flows are much more consistent than others, where cash flows are still very volatile.
Well, so that's as far as Phoenix Mills goes. The other one, and Himen, I wanted to come in on, well, the larger IT pack. I think it's done reasonably okay, but Mastech in particular has really zoomed, and I think it's gained some more legs in the last few minutes. Currently about 12.5% on fairly high volumes too. What's happened here?
Make that 5 months of a consolidation. Range between 300 and 420, and now we're on the cusp of breaking out from this range, Neeraj. So if I look at the short term, yes, but 12% move. Weekly chart, it's definitely improved. So looks promising. On a cool off, it makes sense, but it's breaking out of this range after a long time, Neeraj. Last time it did this was in July. So I have a feeling that things are looking up. A medium term bottom base, however you term it, has been made. Yes, should do well.
The other stock I want to talk about is Colgate. I mean, we've seen how the stock has been moving off late, but what is the possibility, Samir, and I want to come to you on how this particular stock does in the near term. You've seen Mr. Raghavan focusing now on more volume-led growth or at the cost of profitability. He said that stable market, they're looking to focus back majorly on some of those individual markets which they'd lost a little bit of ground on. So how do you think this particular stock works out, considering that they also have no capex requirement till 2022 to further support growth?
So if you see, they have given 80 to 85% of their profits back in cash, whether it's through dividends or other means. So I think overall this has been their kind of a performance for last 15 to 20 years. So I think it will see a little tepid kind of a growth in, let's say, next 6 to 12 months, because it's not easier to bring that volume growth what he's expecting unless he really sacrifices on the margins, and which will not make investors really happy in the short to medium term. But I think if he comes through with a larger market share gain and more consistent volume growth, then it'll be rewarded. But I would still like to put a hold for next 6 to 12 months, not a buy as of now.
It's done well in the last 3 months, about 11.5% for, it's a big stock, a big company, so 11% not bad. Yeah. Heyman, what would you do in terms of a trade on Colgate?
Colgate per se looks slightly different, but the entire FMCG space looks extremely dicey. In fact, Marico is an investment short sell. I believe it's finished some 10-year up move. The longer term indicators are looking extremely negative. We've given a downward breakout. So Colgate per se looks slightly different, and I've been bearish on Hindustan Unilever, but not from that longer point of view. But Colgate is still 1440 breaking should provide it some more traction on the downside, but FMCG as the sector doesn't look that great, and frankly speaking, Marico stands out. I think it's finished a 10-12 year up move, so I'd stay away from it. It's come off quite a bit, so a 20-25 point rise possible, but I have a feeling the stock is going nowhere in the next couple of years.
But you don't think Colgate can go on the upside, right?
Colgate is slightly different in terms of how the patterns are. The Nifty FMCG index, Neeraj, looks dicey.
Yeah, you said that, yeah, but Colgate individually?
Colgate stands out. It doesn't look that bad, frankly speaking.
Okay. So FMCG is corrected quite a bit, but Colgate individually may not. But the Nifty FMCG index is just looking slightly weak. We mentioned at the start of the show how the likes of ITC, HUL, etc., all of them have looked wobbly today. By the way, stock Ujjivan Small Finance Bank is now trading up about 10%. So really remarkable uptick in the session today. Out of the blue, really, I don't think too many people anticipated this, but the stock has done very well for itself. Before we take that conversation forward, and we've already spoken about Ujjivan Small Finance Bank, but there are a bunch of other names that we'll talk about. Let's hear out one more market voice. Harsha Upadhyay of Kotak Mahindra AMC spoke to us, and he expects the markets to remain in a consolidation mode. In a chat with us earlier today, he explained why he prefers private sector banks over the PSU peers, even at the current valuations. Listen.
We continue to believe that markets will consolidate at around current levels. What has happened in the last couple of months is clearly the broader market is witnessing some amount of stability. If you look at last 1 year returns, clearly that's been dominated by large cap returns. But if you look at last 3 months, I think there is an equal measure of mid caps and large caps contributing to the up move. So to that extent, I think market is stabilizing at around current levels. As far as FPI investments due to expected increase in MSCI weight on India, clearly that's a positive, but I don't think it is going to be a very sharp move at that point of time whenever that is introduced. I think people will start positioning themselves towards that particular window period. And we believe that anyways India has been witnessing a decent amount of inflows in the recent past, and that trend should only gather some more steam as and when the weight increase happens.
Harsha, the key question now is that up until now, most of the PSU banks were sidelined in terms of making investments. With the pace of resolutions picking up, with the money that comes in for most of these PSU names, do you think that they could start to become the epicenter of focus for fresh investments? Maybe not something where you already stacked up on some PSUs in your portfolio and want to average out or balance out, but for fresh investments?
We clearly continue to prefer private sector banks. We believe that while there are resolutions that are happening, there will be kind of a slow process. I don't think too many resolutions will happen in a quick period of time. So to that extent, while the current resolution is a welcome step, we don't think that's going to change too much for PSU banks in terms of their business fundamentals. Clearly, the capital adequacy levels are much higher for private sector banks. They have been growing at a slightly higher pace than the rest of the banks. And also from a risk management perspective, I think they are better positioned even at this point of time. And overall, we continue to believe that private sector banks is the space to be rather than PSU banks.
Harsha, good morning. Neeraj here. This talk of the trade resolution between US and China, do you alter or do you include something in the realms of your portfolio which hitherto may not have been, because it would not benefit as a result of the trade war, and now that it is seeing some resolution, it might start seeing some business benefits?
Neeraj, we have heard this story for umpteen times now. I think every week, every day, there has been a twist in this particular expectation. So to that extent, I mean, it's an old news for us. We are not positioning our portfolio based on beneficiaries or the losers because of the trade war. What we are trying to see is, irrespective of what happens there, whether the business fundamentals are steady or not. If we find that business fundamentals are steady, or if we believe that fundamentals are likely to improve going forward, then we are looking to add some of those stocks in our portfolio. But clearly, this news flow has been up and down for many quarters now. So I don't think you can just position and try to be following those events.
Okay, let me try and ask you a question around what would you do within the banking space. Now, I know because you mentioned that you're not looking at PSUs. By that measure, I'm gathering that even the lenders don't form a part here. Within the privates, is your portfolio still tilted heavily towards those higher valued quality names, or in the last 2 months, because you've seen this broader market stability, you have also altered it and tried and get into some of the slightly lower valued, albeit in perception lower quality financials?
Clearly, starting middle of 2018, we have been shifting some of our focus towards some of the corporate lenders within the private sector. I mean, while everybody lends to corporate sector, but I think the proportion of corporate lending has been higher in some of the private sector banks, and these were the ones which were really affected by the asset quality issues. And we have seen that getting remedied slowly and gradually, and they have also been able to raise capital or have capital which is sufficient for future growth as well. So in some of those names, starting middle of 2018, we have been increasing weight. So currently, if you look at our portfolio, it's been a clear blend of the so-called the quality or the ones which have largely no issues on the asset quality from the private retail banks. And also you have banks which had some issues in the previous corporate cycle, but seem to have done well over the last couple of years in terms of growth as well as in terms of some of those provisionings which are required. And from here on, we believe that the credit cost for some of these banks which got affected in the last cycle would start to subside gradually, and that's where we believe the money can be made. So it's been a blend of both of these segments within the private sector banks for us.
All right, that's Harsha Upadhyay with his views on the market. But it's time now also to find out what has made it to Sharad Dubey's list of the Fab 4 stocks of the day. Sharad, what have you got for us?
Hi, Devina. The first stock is Ashiana Housing. It's in the small cap realty space. The stock is up more than 7%. It's highest in a month itself, after company says it has seen booking of almost 244 units out of 250 units in its Jamshedpur project. So that's almost around 3.5 lakh square feet. Up next is Eris Life Science, which is up 3.5% after company said that it will proceed with its share buyback. The company had actually kept at hold this buyback, due to change in the buyback taxation rules as per SEBI. So the buyback was actually for almost 1.29% stake at a buyback price of 575 rupees per share, aggregating up to almost rupees 100 crores. Up next is Indoco Remedies, which is up more than 5% after it receives EU GMP certification for its sterile plant in Goa. So basically, this certification is from the UK's regulator, MHRA. And the last stock of the day is Ramco Systems, which is up almost 2.6% after it gets contract from China Aircraft Services for aviation management software services. So these were the 4 stocks buzzing in the space today. Back to you.
Thanks a lot for that, Sharad. Well, interesting. Some mid-sized companies getting some decent orders as well. I think this morning the stock of BGR Energy was up and active because they got some order too. Now, Ashiana Housing getting some orders, and well, different kind, but I'm just saying small companies getting these orders is leading to some stocks doing rather well for themselves in the session today. Look at Trident, for example. It's a small stock but up and about. And IRB Infra has just gone through the roof now, 8% higher, 73.05. I think it's trading virtually at the high point of the day. Ajit, you want to come in on IRB Infra? It's rising like a phoenix. It normally doesn't do this, but a sudden quick spurt on fairly high volumes. Do you like this chart?
Yeah, that's right, Neeraj. But since the stock is trading at the 52-week low, rather closer to the record lows, in fact, we have seen just a technical bounce back, and similarly the kind of move that we are seeing in the BGR, because mostly these names are basically rebounding with the sharp rise in volume, so they may extend this rebound further, but the overall trend is negative, Neeraj. So in case if you're stuck, so it's best to utilize these opportunities to exit those positions and switch to the better counters.
Okay. That's the call on a couple of these stocks, but look at the markets. I think this is the lowest point of the day, 12,057. So as we were mentioning, there is some profit booking which is coming at higher levels, and 12,057, I think 50 will be the first support that maybe market will be watching out for. Bank Nifty is also slipped about 50 points. That's trading below the mark of 32,000. Kotak Mahindra Bank, that's the one which has hit live highs in today's trade. Of course, that one too has come off the highest point of the day, but it did did surpass the mark of 1700, and as we highlighted at the start of the show, there were long positions coming around even at these levels. We'll get you a technical check, but before that, Samir, it's correct me if I'm wrong, I think this is now expensive than HDFC Bank as well. What do you do here?
So I think you take out some money. You don't take out the full investment, but I think some profit booking is meant to be there, because right now it's showing that the asset quality has remained stable, and it's one of the private banks in past couple of quarters where asset quality has been stable. Now going ahead, whether that remains under such pressures or not, that still remains an overhang. But I think next couple of quarters might be a little asset quality issue driven in the system.
But if somebody, sorry to interrupt, if somebody wants to deploy fresh money, I'm just saying HDFC Bank has been a good bet for the last 5 to 10 years, and the valuations are somewhat the same, Kotak little expensive. Where would you advise to deploy money for long term?
So right now I would avoid both of them. HDFC, because there's a management change, and in banking history I've seen however consistent performer you are, when the management changes, there are meant to be some kind of knee-jerk reactions to the asset quality in the next couple of quarters. It's been very rare that it hasn't been there. What kind of asset quality terms, it really depends on. But I think right now HDFC Bank is not at a place where I would start an investment point of view, because if the management is changing and the new management becomes much more conservative and sees something which the present
what if Paresh Uthankar comes back?
I would still take off some point of money or avoid the investment, because see, when you're at the helm, what kind of decisions you take and what kind of decisions you don't take become very varied. So I think still there's this scope of overhang which people are not seeing right now, and I haven't seen any bank, at least in my career history, however consistent performer they are, whenever it comes closer to the management change, either pre-management change or post, there are a couple of quarters where the asset quality really goes for a toss. So people name it cleanup, but I think that cleanup is always pending up. So I think it's better for me to put money in Axis Bank right now, because I think the amount of money they have raised and the amount of value growth they can show in next couple of years through the subsidiaries. So I think over there the subsidiary valuation is still not in the bank, and I think that can really drive the appreciation on the capital side.
Okay. Let's look at Bajaj Finance too, on what that stock's been doing. Sort of completely lost focus on this one after its QIP. The stock is just about stagnated itself around this 4,000 mark, fell below 4,000 for a few days, has come back up. But in today's session too, as you've got a cut of about 0.75%. So at the lowest point of the day for Bajaj Finance. Eamon, is there a trade that you're looking at out here?
Well, Bajaj Finance and Bajaj Finserv, they both look like ripe shorts, but whenever you short them, they never go down. So frankly speaking, I'm fed up of how they behave. Today, on technical parameters, we're on the verge of giving a downward key reversal or a bar reversal. What I mean to say is we've had a 1, 2, 3, 4, 5.5 trading session move, which seems to have run its course, and there seems to be some near-term pressure. If I take a longer-term point of view, since listing we remain in an uptrend. So it's a very short-term sell call, or it's a buy on decline, because Asian Paint, Bajaj Finance, HDFC Bank, HDFC, technicals don't seem to apply to these stocks. They live in a different planet with different laws of the universe and so on and so forth.
Okay, that's Bajaj Finance. So it's still up about 62% for the last 12 months. As you can see, there have been patches where the stock has come off, specifically in the August to September period where it actually didn't do too much. And then right from October up until December, that flat line. It moved a few gyrations here and there, but it's pretty much in that range where you've seen it be at around 4,000, 3,900 to 4,000 odd. Other than that, let's we've already spoken about IT and the rest of the defensive universe of sorts. Today's session, looking at a few other names, Vodafone Idea continues to look weak. But one stock which is okay right now is a BGR Energy. The stock's up about 19%. Markson's Pharma, smaller name, 8% higher. And eClerx continues to do well. In the last 1 month, Eclex is up about 22% Repco Home Finance has been improving its course about 5% higher in today's session, and over the last 7 days, about 8% gain. So not bad going for Repco as well. And JM Financial, including today's move of about 4.7% in the last 7 days, is up about 11%. Ajit, a Repco Home Finance, a BGR Energy, or a JM Financials, if you track any of these three?
So, Devina, amongst these names, I feel JM Financial is looking very strong on charts. We have seen a very strong accumulation around the weekly charts and closer to around 90 levels. And after this consolidation, I feel that the stock has potential to test 110, 120 levels in a month or two. So considering the volumes and the risk to reward ratio, definitely it's a buy. And with the closing stop loss of 88, in fact, one can initiate fresh long at the current level as well.
Okay, that's JM Financial for you. 12,055 is currently where the index trades, and you've got Adani Ports, which has fallen. ITC, that's a heavy weight, and we were saying how the FMCG space is not looking good. So ITC is down about nearly 2%. Samir, these are just reports now indicating, of course, a GST Council meets on December 18. There are some public health organizations which have written to the members of GST Council requesting them to increase the compensation cess on tobacco products. We don't know if that's going to come, but let's not forget it's not been tinkered with for the last 2 to 2.5 years. I don't know if the stock's down due to such reports, but ITC still not performed. That valuation argument continues with HUL, but what's the road ahead?
So I think ITC, again, that overhang always comes near to the budget, especially the noise really picks up during the budget. And it becomes for anyone as a trading bet. If you see the investment past 3 to 5 years, it's not really given you any kind of movement up or down. So I think it's the only difference over there has been the EBIT through the FMCG, what every investor expected 3 years back, to really go to at least 15 to 20% consistently on the revenues. The revenue growth has been there, but the EBIT on the FMCG part really hasn't come out. Now, what's the reason behind it? Is it regular investment? And that kind of a cash flow burn, as an investor, I'll really not favor it.
It is the investment, right, into the non-cigarette space.
But if you see 1.5 years, 2 years back, they stopped investing in the personal care of, they took off a lot of products out of the shelf. And I think over there also, it really didn't help the EBIT to move up. And that's where I think the whole valuation story will play out only if the EBIT really moves up to 15 to 20%. Till that time, it really doesn't make sense for me to wait along through that investment. Okay. So it's better to avoid.
Okay, avoid. But I mean, very quickly, HUL, ITC, both are down. Do you take a bet on any one of them?
ITC below 234, it's going to tank. Underperformer, it'll underperform some more. 234 is crucial, haven't broken through.
I love your use of words. Like you've just like given an outright, it's not time. There's no midway.
234, 220 to 200, next 6 months.
Next 6 months, okay.
Yeah, happy to open a positional short as well, I reckon.
I tell the out of the money call because maybe some silly bounce, because when the market tanks, we will run to FMCG. So notwithstanding the silly bounce, I'll sell the out of the money call, and when it breaks 234 in cash, I'll go short in futures.
It's dragging the FMCG index down along with it today as well, both HUL and ITC. But yeah, 1.26%, it's looking pretty weak is the Nifty FMCG index. Our dealing room's talking about it is the question, and we should try and get that going as well. But just keep in mind, it's not all bad, and there are a few gainers as well in the session today. Stocks which have done well, FMCG might be doing really bad, and stocks like Grasim, Coal India, etc. are doing very bad too. But IT is holding out, and which is probably a good sign. Though I think the market breadth has worsened. So while we might just be down about 0.25%, if we get the Nifty heat map, just the Nifty heat map, you will see just about 10 or 11 stocks in the green now. So the quantum of reds has certainly overtaken the quantum of green by a margin. Darshan Mehta joins in right now with his sense of what dealing rooms are telling him in the session today. Darshan, good afternoon. How is it what is the conversation like?
Yeah, so today it's been rather muted as such as far as the dealing room is concerned. But one of the stocks that's been spoken about is L&T managing to hold on today. Hasn't done much, absolutely flat in trade. A couple of reasons what was spoken about. I think if you read the papers, there were a lot of concerns in terms of some of the projects in Maharashtra getting shelved. Some of the key ones got the green approval, at least the Mumbai-Nagpur Expressway. In terms of there was also a Morgan Stanley note indicating that if the MSCI inclusion does happen, there could be buy flows to the tune of $500 million on L&T. On those reasons, there is accumulation. One of the nifty stocks which has managed to hit a record high today is HDFC, and dealers believe that the rally will continue. Again, there is pain in the housing development space, and money seems to be flowing to the leader, and that is where HDFC seems to be getting a lot of funds. And finally, Jubilant Food is one of the stocks that's been spoken about. Hasn't done much in trade today. In fact, it's down 1.3%. But dealers indicate that some of the HNIs are actively accumulating the counter at lower levels. So these are the stocks that's been spoken about.
All right, Darshan, thanks very much for that. So that's what dealing rooms are recommending this afternoon. Anything else, Ajit, that has struck your attention in the last half an hour of trade that you would like to initiate a position on?
So, Devina, though the index, we've hardly seen any dip, the stocks are moving in both sides of the market, and we have seen severe downtick in some of these counters. So, considering that, one should maintain long and short both. So we already have shared 2 long recommendations. So I would prefer initiating a short on LIC Housing Finance at current levels. The stock after the recent rebound failed to surpass the resistance closer to around 440 mark. So that's the area where one should maintain a stop loss, and closer to around 410, that should be the target.
Okay, got that. Let's take a look at something that's not doing well, and that's BF Utility. So it's giving back about 5%. We've got Sterlite Tech, which is down 5%. In the last 3 months, Sterlite Tech has been down 23%. In the last 6 months, it's been down 36%, while the last 1 year, it's been down about 60%. Is there any scope for this stock, Samir?
I highly doubt, because since the news came out when China cut off the prices for the bids they were inviting of, it really hasn't recovered from there, and that time it was 160, 170 levels. So I think now the capex zone of the 5G really doesn't incrementally help these companies. It mainly increases the incremental capex from, let's say, Jio or Bharti Airtel. The main capex, if 5G has to come, will be from Vodafone or any new player which comes in, if they are willing enough to shift from there. So I think Jio and Bharti Airtel are still comfortably only looking at incremental capex to service 5G. And I think over there, Sterlite, if you see the balance sheets are really stressed. The working capital cycle has stretched further by 40 to 45%. The global outlook is not good, and domestic is worsening off. So I think it has more downside risk right now still from this price as compared to any upside risk or any upside triggers.
Okay.
I think I also saw an article which said how 2 of their senior executives have resigned as well for Sterlite Tech. So I don't know if that is also adding to some bit of pressure in the sector.
Well, that anyways doesn't bear good news. So,
yeah.
And look what it did for Z. Which brings me to my next question, actually. Dish TV, is it a sitting duck to go short? I mean, that will be a question for Hemant, but from a fundamental standpoint to you.
So I think any kind of bounce in Dish TV is a short for me. And even on Z right now, I don't feel that story of being Z sold out is now over. Now the real dynamics come in. And if you see the Sun commentary or Z, the ad revenues are not showing any kind of improvement even on monthly basis. As per my channel checks, really doesn't help out. So I think even Z as a prospective short, I don't know technically whether it supports or not, but next couple of quarters it can show a further downside.
Hemant, is it going to tank further?
No, it's been hatching eggs for 11 weeks. I mean, after 11 weeks, it's like tossing a coin whether it's going to go up or go down, and it's oversold. So I'd short it Dish TV only if it breaks the princely sum of 10.50. Otherwise, I'd stay away, because a silly bounce cannot be ruled out, because 11 weeks, if it's not tanking, chances are it'll give a bounce before it tanks. So no, it's not a short for me.
Princely sum. Interesting use of words for a stock like Dish TV currently. I must say, though, well, when I look at the names, Nifty 500, BGR Energy is really rocking today, about 18%. So we look, it's a difficult one to track fundamentally, so keep that at the back of your mind, but it's doing really well for itself. And then Kansai Nerolac has gained some gains today. So it's up about 3.5% and 548. There's a wonderful report which speaks about how there's been virtually no correlation between the passenger vehicle cycle and Kansai Nerolac PE multiples. People usually tend to classify it or club it with the passenger vehicle cycle as well. Let's wait and watch. A good start to a good end to the Kansai Nerolac trade today. Just before we get in closing strategies from our experts, you want to come in on Kansai Nerolac? People usually talk about Asian Paints and Berger, but Kansai, in an interaction with us about a month and a half back, said that the kind of growth that they've enjoyed for the next 18 years, he believed that the industry would actually continue doing that kind of growth for the next 10, 12, 15 years as well. Is it a stock worth looking at?
So I think paint as an industry has outperformed this slowdown till yet, like a life insurance has. So I think paint is due for a correction. And in terms of volumes, it will come off in December and March quarter, apparently, at least quarter-on-quarter basis. That's where these kind of valuations still go down further for me. So I see further as in a new downside risk to paint industries right now. So it's better to stay off from Asian Paints, Berger or Kansai. Kansai is always given a higher correlation because of the industry revenue contribution. But I think still Kansai on the decorative side has rarely done well, and the market shares have gained. But I feel right now still maybe a 450, 400 levels are better off for Kansai.
Okay. That's some of the paint stocks. We'll let you go on that note, Samir. Thank you very much for joining us. Really appreciate it. All right, we're just about 10 minutes left to go for market closing. So while the indices have slipped, we're at 12,051 on the Nifty. The Nifty Bank is sub to 32,000, so that's 31,973. It's turning out to be quite a dull day. Let's get in a sense of whether or not there is any closing trade, any buy today, sell tomorrow idea that any of our technical guests have. I'll go to Ajit first. Ajit.
So, Devina, since we are still seeing buoyancy in the banking space, I feel excess after the recent rebound. So broadly, if you'll see the stock, it has been consolidated in this band of 710 to 750, 760. So it's again reached closer to the upper band of the same, and possibility of breakout is very strong this time. So considering that, one should consider excess for the BTST trade with 735 as stop loss and closer to around 760, 765 as a target area.
What about you? Your top call?
SPBT on Bajaj Auto.
You're a wide variety, I guess, a wide choice. You just chose which stock to speak about. What, 1% target, 2% target, 1% stop loss?
Yes, I think they were the short on Maruti, Bosch, Concor, Bajaj Auto, Pidilite, but yeah, Bajaj Auto.
Essentially autos, which are looking very, very wobbly.
Would you choose Hero Motor that's also approaching its 52-week low?
Yeah, but it's so weak, you might just see a sympathy bounce.
Okay, some consolation for Hero MotoCorp, which is down, by the way, in today's trading session. I think one of our techies had given a call on IGL as well. So, Ajit, would you advise carrying home long positions in IGL today, which is still maintained its gains about 1.5%?
Yeah, certainly, Navneet. In fact, in the beginning of the show, we have recommended to go long an IGL at current levels, and we are hoping for the stock to retest the record high and test 440, 445 levels. But since we are seeing profit taking in between the market as well, so one should maintain a very strict stop at 412.
Longs in Kotak, what would you advise to do?
Longs in Kotak, and the view would be for how long?
Your call. You take a call. If somebody is holding long positions, the stock's already off the high point of the day. Should they carry home the position or cover it?
No, I'd prefer to book out if it's a 1 or 2 day call. Otherwise, all-time high looks good, heading towards 1800.
But I think there's something happening in Godrej Properties. You just pull up that stock. It's now at 943, and you've seen it's just shot up straight. In the full day, I think it languished somewhere closer to 920, didn't move from there, and then this sudden big spurt that has come into the counter right now, 943 on Godrej Properties. Remember, this has been in a lull for some time now. I think last 2 or 3 weeks, didn't do anything, stayed sub 900. From there, you saw that initial kicker that came in, took it to levels of about 920 odd. In the morning session, it started off higher, somewhere closer to levels of about 930 odd, went down, and now right now at 942. Ajit, quickly, Godrej Properties.
So, you're right that after retesting the record highs closer to around 1100 mark, the stock has retraced closer to the level of around 200 EMA on the daily chart. So after spending nearly a month, we are seeing a rebound now. So we believe this rebound will extend further, considering the kind of volume that the stock have witnessed with the rebound. So closer to around 975, 980 is what one can target, and 900 should be a stop loss in that case.
Okay, Ajit, we'll let you go on that note. Thanks much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. Well, ADAG as a pack has done well today, though you don't quite know when these stocks might come off as well. So be mindful of that. PNB Housing up about a couple of percentage points. Tata Power up about a couple of percentage points. And Godrej Industries, not properties, but Godrej Industries is up about 1.5%. So do watch out for that. A stock that is defying the auto downtick is Bharat Forge, up about 1.25%. Any thoughts here, Hemant? Bharat Forge?
Bharat Forge, Neeraj, from a slightly longer term point of view, seems to be stabilizing. Neeraj, we've spent almost a dozen weeks between 410 and 480, and now we're actually making an attempt to give an upward breakout from here. So, a medium term base has been formed. The correction from 800 to 380, I believe, has run its course. Weekly chart, so the medium term outlook has improved. Longer term stability, so notwithstanding what has happened today and not a very short term call, I think we are setting the stage for an 8% upside from here above 485, 490. Looks good. Worst seems to be over. Further upside seems like a distinct possibility.
Okay. One final question from mine at least, and before we start wrapping up the markets, while other pockets might be quiet, sugar as a pocket has shown some interesting trends the last few days. Is there any stock that is looking attractive on the charts from the sugar space?
I think there's Dwarike Sugar, which hasn't done anything in 1.5 years. Now it's probably making all the right noises. We're at 26.85, Neeraj. Our breakout comes in at 28.50. So I think Dwarikesh would be something which I would look at, because Balrampur has moved quite a bit. Further upside, yes, but Dwarikesh can be a dark horse. So the percentage returns could be better.
Okay, Hemant, just a final closing thought from you post-market close, but let's start wrapping up the markets, and a flattish kind of a day, disappointing of sorts, and while we didn't start off the way the SGX Nifty indicated, we are ending in or around those levels that were indicated at the start of the trading day today. The mid-cap and the small-cap indices will also come up on your screen. Well, down about 7 points for the small caps, but the mid caps cracked a bit, about 100 points lower, and it showed in the way some other stocks reacted too. But let me talk about the large caps first. And the number of losers shrank in proportion as the day went by. You'd still have about 8-9 stocks in the green, but look at the quantum of those gains. Hardly anything. TCS 2.5%, Tech Mahindra about 1.5%. HCL Tech, so IT did okay. HDFC and Kotak Bank held out, but aside of that, not too much, precious little really. But look at the list of gainers too. No dramatic cracks, as is evident by the way the markets have shut shop, but a number of stocks losing out. Grasim, Adani Port, Bharti Infra, fairly varied. FMCG was a big culprit today. ITC, HUL, even consumption names like Titan, all of them gave way. So this pocket really stood out in terms of trade today. If IT helped on the upside, FMCG was the sole culprit, or the biggest culprit on the downside. Now we thought about the broader end of the spectrum.
Well, the selling pressure was seen in the broader markets as well. Today, the market breadth was not that encouraging, but looking at the individual stocks, there were some stocks which were moving around on back of some news. But Nifty Mid-Cap Index definitely closing around the lowest point of the day with cuts of 0.6%. So something like BGR Energy, the stock which was locked in upper circuit on Friday with gains of 20%, gains of another 16% seen. Remember, Tamil Nadu Generation and Distribution Corp had given them an order of about 40 4,400 crore. It's a company, by the way, with market cap of just about 260, 270 crore. Mastic is the other one, which shot up in the second half of the session. Of course, what's auguring well for this one is a decisive verdict coming in from UK elections as well. It derives 70% of its revenue from there, 10 to 10.5% gains here. Ujjivan Small Finance Bank, which listed on December 12, that was Thursday, touched levels of closer to 63. There was some profit booking seen on Friday. It's back in action and it's closing at the highest point of the day. 13.5% gains, 59 is the level. Ashiana Housing went up on news that 244 units have been booked in for their Jamshedpur project, and that stock also gained. By the way, the stock's in focus after a really long time. And IGL, technically, Amit also gave a buy call on this one. So this one maintained its gains despite of markets seeing profit booking at higher levels, 2% higher for IGL. On the losing side, Eminent Financial, which was also one of your top F&O losers, the stock corrected nearly 4%, taking support at its 50-day moving average. Bandhan Bank was the other one, which didn't have a great day at all. There was selling pressure evident here, 5% lower for Bandhan Bank. Ashok Leyland among the auto companies was weak. In fact, the auto pack largely was weak, but Ashok Leyland was also down about nearly 2% in trade. You got something like NIT Limited, where no recovery could be seen, so that stock's closing with cuts of 7%. Sterlite Technologies has been in focus in the recent past, and no sort of news has been able to provide that fillip to this counter, down 5% today as well. And BF Utilities too has been in focus. There are days when the stock was higher last week, but profit booking seen here, closing at the lowest point of the day.
All right, well, that's what we got. We got a softer close. The Nifty Bank, though, ending flat for the day. The Nifty itself losing about 26 odd points. So we're under 32,000, at least on the last traded price on the Nifty Bank. Nifty 50 at 12,060. Coming to individual movers and what contributed in today's session, there was a bit of a drag that came in from obviously the banks and the heavyweights like Reliance, which dipped about 10 odd points on the index. What did well was the defensives like TCS that did well. ICICI Bank, Kotak Mahindra Bank and HDFC Limited held on the upside.
Okay, that's about your key Nifty contributors, but let's also take a look at the market breadth, which was in favor of the declines. I think after 12:30 was the time where declines took over. In the last, of course, half an hour to 45 minutes, there was aggressive selling seen there as well. But in terms of participation, your cash and F&O turnover should also come up on your screen. So cash has been on the lower side, sub 30,000, and NSE F&O is just fine. On a Monday, you tend to see turnover between 8.5 to 9 lakh crore.
Well, with the FIIs going on a holiday, you would probably see the cash number being slightly softer, probably the last week, 2 weeks of December. But let's also get in those quick closing comments from our technical experts. Ajit, I'm going to come to you first. All right, Hemin, let's get your sense of what to do come tomorrow.
Well, I think the markets have cooled off a bit, necessary, Devina. I think maybe they might cool off for a day more. The VIX is comfortable. We are at 13.44, so I think that augurs well. No levels have been broken. We've seen resistance from the previous high, so small cool off, maybe a day or two, but I would be more bullish than bearish. So on decline at support levels, I would be long and not very short. Whatever shorts are, maybe from a BTST or a intraday point of view. We remain poised to make an attempt at an all-time high, and if we do take that out, I think December could surprise with or without FIs.
I mean, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. Well, in the protests in various forms across the country, rallies against police action on the university students at Jamia Islamia on Sunday night. The violence has also spread to some universities in Uttar Pradesh as well, with clashes being reported at Lucknow University and Benares in the university. Aditya Menon of the Quint joins us now for more on this. Aditya, how grave is the situation right now?
So yesterday was pretty bad in Jamia. During the day tests in campus, a few miscreants, they came and set buses on fire near Jamia, not inside the campus, slightly ahead at New Friends Colony. The police entered the campus at a little after 6 p.m. They entered the library, attacked students in the library, picked up a lot of students. They went to the campus mosque and picked up students from there. I mean, much of the university property was damaged in these raids. Around 52 students were detained by the police. They were taken to 2 separate police stations in Delhi. Around 200 students were injured in these clashes with the police. The students claim that they were not involved in the arson or in any of the attacks on the police, and they say that it was people from outside who did that. So around 200 students had been hospitalized and had to undergo treatment. Meanwhile, the 50 odd students who were detained, they were released at around 3 a.m. after a great deal of intervention by local politicians like Amanatullah Khan of Aam Aadmi Party and Subhash Chopra of Congress. Then, of course, there were activists like Harsh Mandar, Yogendra Yadav, who also negotiated with the police. The students have not been charged with anything. The police probably realized that these students were not involved in the violence, so they have not been charged. They've been let off. They were sent to hospitals to undergo treatment. Some of the students have slightly serious injuries. Most of the others, they were given basic first aid and they were let off. So it continued till around 4 a.m. in the morning, by which time many of the students had been released.
Okay, Aditya, thanks so much for giving us a lowdown on what the current situation is right now with regards to those protests. Well, we wrap it up on this leg of countdown on the note that the markets have ended on a somber note. Let's see if tomorrow there's a bit of a pickup. But it's a wrap on this edition, as I said, from Naveen, Devina and me and the team that put this show together. Thanks so much for watching.